Hey traders, this is John Howell here, and in this free training, you're about to learn the 7 powerful universal trading laws to becoming a consistent profitable trader without spending 15 years trying to figure it out. See, 15 years ago when I first started trading, my first few years was horrible. I was $250,000 in debt and almost facing bankruptcy. Now, I was very fortunate throughout the last 15 years by being coached and mentored by 2 different 7-figure traders, and they really have helped me to become a consistent profitable trader. So I'm going to be sharing with you the 7 things that really helps me do really well in the markets, and how you can start to apply these to your own trading today. Okay, so get your pens, get your paper, and get ready for that as well too. Also, at the end of this training, I learned something from Tony Robbins, and the interesting thing is that Arnold Schwarzenegger said the exact same thing, which had a massive difference on my success. And I'm going to share exactly what they share with me. You're going to absolutely blow them away by this. So at the end of this presentation, I'm going to share exactly what they said to me that totally turned it around and helped me with my success in the markets as well too. Now, before I do start, guys, I do not want you to be placing a trade based on what you're seeing in this training, okay? This training here, I'm going to be walking you through 7 universal laws, and part of those universal laws, I'm going to be walking you through a simple but powerful trading system. I'm going to be walking through some of my trades that I've done. I'm going to be walking through some of the numbers, some of the trades that I've done as well too, the numbers and the returns. But please take this as potential return. Okay, you know that there's a lot more that goes into trading than just a free training, right? Please take what you're learning here and go out and back test it, go out and test it for yourself, and see if you can see if it works for you or not. Okay. I'm going to be walking through an amazing trading system, part of these 7 universal laws. And throughout that, you're going to be able to start to see how you too can start to get ahead in the markets, and how simple it can be if you just follow a simple 4-step process. And that's exactly what you're going to learn there, okay? But please do not go out there and start to place trades live in the market until you have proven to yourself that it works for you, okay? Now, this is just the foundations here, okay? So anyway, let's get straight into the training right now. What I'm about to get into right now is the 7 universal laws to become a master trader. Guys, give me a 1, 2, 3 in the chat box if you're excited to learn this 7 universal laws. I'm pummeling over my phone. All right, fantastic. 6, 7, 8. 1, 2, 3, Mike's to Sydney. All right, guys, fantastic. 1 minute, guys, 1 minute. I just had to turn my aircon on. It's getting hot in this office. I'm generating so much energy right now. All right, cool. So let's get straight into today's 7 universal laws to become a master trader. Grab your pens, grab your paper, guys, and I want you writing this down because it's truly going to start to move forward. All right, here we go. Universal law number 1. This is a big thing for me because when I first started trading, there was so much out there that I could focus on. Do I focus on technicals? Or do I focus on technicals versus fundamentals? Do I focus on fundamentals? Do I focus on subscriptions? Do I focus on YouTube? Do I focus on something else? Mike, you can just write it out there. So, what do I focus on? Right? Because here's the thing, guys. Here's the thing. When we are trading, we just want a simple process to help us get ahead. And we just want to be able to have a simple and we want to be able to approach the market, and I promise you guys, to help you take the confusion out of the markets. And one of the things about taking the confusion out of the markets is not focusing on things that's not really going to serve you at all. Guys, give me an A in the chat box if that makes sense. Taking the confusion out of the markets is stop spending time focused on things that's not going to serve you at all. When it comes to trading, that is. All right, fantastic. So a long time ago, back in 2008, I really learned this lesson really well. And what ended up happening was this, right? What we're looking at right now is we're looking at a chart of the Dow Jones, and this was the 2008 financial collapse. Now, the reason why I've brought this up here was because when I was trading this, the market was stair-stepping down through here. All right, so guys, can you see that arrow on your side? Give me Y if you can see that arrow. All right, fantastic. All right, so the market was stair-stepping down. Okay, so the market was stair-stepping down. And then the market was stair-stepping down. And what ended up happening at this time, as the market was rolling over, my processes, my systems were telling me to go short. Now, what I was doing is I was buying put options as this market was rolling over. Now, I'll get into the system process a bit later on, but my systems were telling me to roll over. And again, guys, this is when I was really getting heated up into, into trading. And what ended up happening was I had a friend of mine, and he was purely a fundamental trader doing short-term bullish strategies, 2 to 3 month bullish strategies. I'm not going to get into the strategies, but he was doing bullish strategies. But they're about 2 to 3 months out. So what his strategy was, is he was looking for stocks that are undervalued, PE ratio and all that sort of stuff, that I didn't understand what that meant. I was purely just trading technical, and that's all I was trading. But he was trading these fundamentals, these stocks that were undervalued fundamentally. I'm like, okay then. So what I was doing, he was calling me nuts for shorting the market or buying puts in the market. What he was doing, he was buying stocks, or he's doing bullish strategies with stocks that were undervalued. So he was a fundamental trader, and I was a technical trader. And this is when it really drove home for me what I really need to be focused on. And as this market was rolling over, I was buying put options, and I was making a fortune of buying put options as this market was starting to roll over. So as this market started to roll over, and even when this started to happen, now this is like a weekly chart here, guys, or a 7-day chart. So as this market started to roll over, and even when we got the financial collapse, guess what ended up? And as this financial collapse, guess what my friend was doing as well too. I was buying put options, and he was calling me nuts. Now I started questioning myself, because I wasn't a real big success. I was doing well, and I started to move forward. But my mate, or my friend at that time, he was a multi-millionaire trader from the strategies that he was trading. He's like, these stocks are so undervalued. These stocks are so undervalued. John, how can you be short in the market right now? This thing's going to rebound back. And so he went in, and he started doing all these bullish strategies on about 10 to 12 different stocks. And he was bullish on all these stocks. These things are so undervalued. And 2 to 3 months out, guess what ended up happening? The market kept going down. And then after that time, I was still buying puts. Now, by the way, guys, 2008 was a phenomenal year for me, because I was just trading purely technical. Where my mate fundamentally, now I'm using the Dow Jones as an example. I was trading stocks with the options and just buying put options, writing it down. And my mate, who was a fundamental trader, he was just like, John, I can't believe what you're doing. But guess what ended up happening? As this market came down, I'm not sure exactly what happened, but then as this market started to rise up, it was about the middle of 2009 that my mate, who was a multi-millionaire, trading those strategies, obviously in a bullish market. And I was trading the bullish market through all this time as well too. Purely technical. And so was my mate. He made a fortune. But guess what ended up happening? He was trading fundamentals. And he was trading the stocks under fundamentals. And the technicals kept saying that this is not turning around yet. So don't do any bullish strategies yet. Well, I didn't know what the fundamentals were, because I didn't know how to even read the fundamentals. And as the market started to come down, I was buying put options. And then my mate, the multi-millionaire, by mid-2009, he disappeared. I couldn't get a hold of him, and I still have not heard from him ever since. He blew himself completely out of the water because he was trading fundamentals. Now, guys, what I'm about here in this presentation is to make things simple for you guys and not complicated, so we can actually start to move forward in the markets. Because there's so many things out there that we can focus on. That after this time, I realized at this time that the most important part of trading, the most important part and the only part we need to be focusing on, is the chart itself and what the chart is telling us. And continue to read that chart bar after bar after bar, because that's the story it's telling us. And as long as we're reading the story from the chart it's telling us, then that's what it's all about. And I really learned this. My mate, who was a multi-millionaire from trading bullish strategies from 2003 up to 2007, he thought he was all that because trading bullish market. When the market came down, he not only did his entire account get wiped out, but I think it was embarrassing, disappeared. 2008 was a phenomenal year for me. Phenomenal year for me. Now again, I'm not bragging about this, but I'm saying this was one of the biggest things that I really learned, guys. When trading the markets, I wanted something simple. Because when we first start trading, there's all these different things, YouTube, and we think we have subscriptions and all that sort of stuff. And it really drove home. You know, guys, things, you know, stocks, like I'm pretty sure, guys, right now that when we look at some stocks right now as we speak, there's the PE ratio, right? They're so overvalued. Guys, give me an A in the chat box if you've heard many stocks in the market right now being overvalued, but they just keep going, they just keep going up. Right? They just keep going up and keep going up. There's like, these things are so overvalued. How can they keep going up? And guess what? They keep going up and keep going up. So the most important thing about this lesson is universal one is focus on the charts only. Do not ever, 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 ever place a trade in the markets based on what you think's going to happen, what you think's going to happen, or a newsletter or someone else. Purely trade on what the chart's telling you. In fact, guys, not only that, but look what Charles Dow said. Charles Dow. He said, the price discounts everything. The market has three trends. Major trends have three phases. The average must confirm each other. Volume must confirm the trend. A trend is assured to be in effect until it gives a definite signal that it has reversed. I want you to look at those two things there. And this really drove home for me. The price discounts everything. And the trend is assured. It's gonna keep going up until there is a definite signal that it has reversed. And I'll talk about some simple things that about trend analysis in a minute. But once I learned this, guys, I didn't even look at fundamentals. I didn't look at PE ratios. I didn't look at about the valuations of the companies. I didn't need to. What I needed was a simple system to getting in and get out of the markets with a high probability, and then I can start to move forward. So if we're focusing on fundamentals and we're focusing on all these other things, I think it's definitely hurting your chances of moving forward in the markets. Or it was for me it wasn't for me. And thankfully I learned that lesson from my mate. That fundamentals, I made a lot of money and he just got absolutely just hammered. So that's universal law number one. Universal law number one is what do you focus on versus what do you focus on? Technicals or fundamentals, things like that. The most important thing, guys, is technicals. Now, following on from number one, universal law number two, simple charts, keep it simple. Now, the reason why we want to keep it simple, guys, remember, this is all about taking the confusion out of the markets, building more confidence, and helping be more confident in your trading. A confused mind seeking clarity will only further confuse itself because a confused mind cannot find clarity. It's confused. What can it do? Any search on its part will only lead to further confusion. Come on, guys, give me Y in the chat box if we've actually done that in our trading, right? We're not sure, so we start to do more research. And then we're still not sure, and we start to do more research. And now we're still not sure, right? I've done that many a times. I started looking at websites. It's like, a confused mind is a confused mind. So with your charts, now we know that step number one, the charting. Charting is the most important part. Step number two, keep your chart simple. Now, guys, what ended up happening was when I first started trading, my charts looked like this. There was MACD there was RSI, there was a stochastics there. There was actually two stochastics there. There was volume there. I had 4 moving averages. I had Bollinger Bands. Guys, come on, give me an A in the chat box if you've had your chart chart looking like this at least once in your career, right? At least once, right? Come on, we're all friends here, right? We're all friends here. So that's exactly what happened, right? That's exactly what ended up happening and I had so much on the charts. Can't type, taking notes, right? So there was so much on the charts that I was going away from what rule number one was. Focus on the chart. The most important thing, as Charles Dow says, is the price action. And I was doing okay, but I wasn't doing as good as I thought. And then I started seeing some multi-millionaires. And so this is what ended up happening. So my chart went from that, and slowly and surely I started moving things. I started moving the MACD. I started moving the RSI. I started removing some moving averages. I removed the Bollinger Bands. I started moving the stochastics. And now, all I trade with, guys, is this. Guys, give me a Z in the chat box if you look at a chart like this is taking the confusion out of the chart now. Right? Because now it's simple, it's basic, but that's what we should be focusing on, is the chart itself. Again, guys, I'm going to get into a lot more detail than this, but this is what we should be focused on, is the chart itself. And that's all I trade with right now. You think, oh my goodness, John. Remember, guys, the only reason why we have indicators in the first place is we're trying to be right on every single trade, which is just ludicrous, because you're not going to be right on every single trade. I'll talk more about that a bit later on. But we're trying to find all these reasons to try to be right on every trade. And we end up making confusion out of ourselves, and we end up stopping ourselves from moving forward. It's like, oh my goodness, there was a trade, there wasn't a trade, and we're so confusing there. So what ends up happening is that we just get so confused, and that's the only reason why we're looking at indicators, really, because indicators are just really lagging prices. The most important, probably the two most important things on a chart is the chart and volume. They're the two most important things on the chart altogether. And then thirdly, maybe a moving average to give you a bit of gauge on what we call price and time, where it's basically where's the momentum at that time. So that's exactly what I look at in my charts. Now, let me give you some basic, simple analysis of what to look at in the charts. This is basic, simple, but it's the only thing that I use right now, guys, when I'm trying to determine what's happening in the markets. It's the only thing I use, because it's the only thing you need to use. I'm gonna go back to the Dow Jones 30. I'm gonna go back to the Dow Jones 30 chart here. And I'm going to share with you exactly what shared with me. Some simple, basic analysis, but the most powerful analysis on the planet. And this is all I focus on to help me gauge what's happening right now in the market. And that's all we need to worry about. And if we're worried about something else happening in the future, let the chart tell you. Let the chart tell you. Now, what was I looking at? I was simply looking at the peaks and troughs. And let's just keep this really, really simple. In an uptrend, we have higher highs and higher lows. You guys have probably seen this, but the better you get at identifying this, the more profitable you'll be. This is one of the biggest things that actually made me really peaks and troughs. Exactly right. This is the one that made me do really well in 2008, because I was riding the downtrend. In a downtrend, we have lower highs and lower lows. Now, let's actually go back to the start of this chart, way back here. Right, way back here. And we'll just look at this here, right? So the market's made a higher low. It's made another higher low. We made another higher low. Guys, who's in control? A, sellers, B, buyers. Who's in control right now as we speak on this chart? Who's in control? We're making higher lows all the way up. Buyers. It's that simple. We don't need indicators. We don't need moving averages. We don't need crossovers. We don't need anything like that, because that's confusing it more. Buyers, as long as the buyers are pushing it up, making higher lows, higher low, buyers still in control, higher low, buyers still in control. Oh, look what happened here. This is a lower low. Oh, this is a lower high. Now we came down and we made another lower low. Hang on a minute. We were making higher lows and higher highs all the way up here from 2005 into 2007. But something's changed. We've now made two consecutive lower lows, and now we're making lower highs, breaking of the lows. Guys, who's in control right now? Who's in control here? Sellers, right? It's that simple. We don't need to worry about anything else. We don't need to worry about, oh, the market's going to turn around. The chart will tell us if it's going to turn around. And we don't need to, and the worst thing we can do as traders when we're trying to get some less confusion out of the markets is try to think, oh, well, what happens if this happens? What happens if this happens? What happens if that happens? What if this happens? It's like we just need to focus on the charts. Jake says, how many lower highs and lower lows are needed to confirm, to consider a downtrend? One. lower low, lower high, and as long as we're breaking of the lows, so for example right here, Jake, right, we had this lower low, lower high. As soon as we're breaking this low, we're definitely in a downtrend now. Make sense, Jake? We're definitely in a downtrend. Major sellers in control. Remember, guys, this is like a weekly chart here. So this is the bigger time frame. So you shouldn't have been long like my mate was, multi-millionaire, who was just going bullish strategies galore. I was saying puts galore. Now, obviously, you need to have your systems, your strategies, and processes. But guys, when we're looking at the charts and we're trying to determine who's in control and what's really going on, this is the only thing. This is the only thing we need to worry about. And as you can see, what ended up happening? The market came down, it made a lower high and a lower low. It made another lower low. And what's this here? This is the very first higher low. This was another lower high, but look what ended up happening. Guys, right here, this was the very first breaking of a previous high after making a higher high than it had the entire year. So the market ran down the entire year, making lower highs, lower highs, lower highs, lower highs. And right here, where my arrows are, is the very first time it broke the high to the upside, also including a higher low. Guys, give me an A in the chat box if you can see that. That's where the overall trend changed, and we know what happened after since, right? It's that simple. We just focus on that. And as long as we can identify that's all that matters. It's not what we need 2 or 3 higher highs to confirm or 2 or 3 lower lows or anything, all that sort of stuff. Tom, you said how about a 5-minute time frame? Tom, this works on any chart. Whether this is a daily chart, a weekly chart, a 5-minute chart, a 1-minute chart, they all operate the same way. A chart is a chart is a chart. They all make the same patterns. They all do the same thing. Forex charts, futures charts, stock charts, they all do the same patterns. This is how the markets operate. So take the confusion out, guys, and just focus on this one simple thing. Don't go back to your indicators because it's just going to cause so much confusion. All right, fantastic there. All right, guys, give me a yes in the chat box if you've enjoyed the first 2 universal laws so far. Give me an A in the chat box. I'll take a bit of a drink here. I'm talking too fast. All right, fantastic. All right. So let's actually look at this here right now. Tom, let's actually focus on the presentation. Fantastic. Universal law number 3. Have a trading style fit your overall ideal lifestyle. Not have a trading style that's going to make you the most profit. Because what will end up happening is the trading style that's going to make you the most profit ends up making you less money. Because now you don't have a trading style fit your overall ideal lifestyle. Let me tell you what I'm explaining here. In the past, as you guys know, my trading was I trade Aussie options, I trade the Forex market, the futures market, US stocks and options. I trade 16 to 20 hours a day. Why was I doing that? Because I thought that I had to trade all these markets, and all this time to make a lot of money. But what ended up happening was, you guys know the story. I actually was limiting my money potential because I was making a lot of mistakes as well. I was doing okay, but I was also making a lot of mistakes. So, but now I have a trading style for my overall ideal lifestyle, and I'm open-minded to the markets that I trade. So now what I do today is I get up first thing in the morning to trade the last hour of the US stock market. I run a scan over thousands of stocks, and out of those thousands of stocks that can trade options, because I trade options for the leverage, and I'll talk about that in a minute. Again, guys, I was open-minded to be able to have a trading style for my overall ideal lifestyle. And now I trade 1 to 2 hours in the morning, and the rest of the day I'm off enjoying my other hobbies, health, and things like coaching and stuff like that. Things that I just really enjoy. But 1 to 2 hours a day in the morning. Now, every now and then, at the start of this session, I said 1 to 3 hours. The reason why I say 1 to 3 hours, because every now and then I'll go in the office for an hour or so and just go over some charts, do some analysis. Most of the time I don't do that. 90% of the time I don't do that. Now I have a trading style. Guess what's happened to my income? It's gone up. It's actually gone up by only trading a few hours a day. How can that be? Because I'm now making less mistakes. I now have to only focus an hour or so per day instead of 16 hours a day. And now because of that, my income's gone up from that. Trading 16 hours a day, then trading 1 or 2 hours a day. Now again, guys, I had this thing that I had to trade a lot of hours to make a lot of money. In fact, it was the opposite. I was actually making a lot of mistakes, which was, I'd make 90 grand and then I'd end up with 30. And I'd make 100 grand and I'd end up with 30. And then I'd make 80 grand and I'd end up with 20 grand. So guys, when you make $100,000 and then you end up with $30,000, do you think you're still pretty happy at the end of the month? Knowing that you were at 100 grand and now you're down to 30? It's like, no. It's like, come on now. What the hell? And I did this so many times. I thought, what's going on here? I get my account up, I'd make a lot of money in a month, and then I bring it back down. And I make a lot of money and bring it back down. I'm like, what's going on here? Now your mind's really screwed. Because you're thinking, I was after 30,000 a month, I was happy with 30,000 a month, but once you see that you made 100 grand in a month, and then suddenly now you're only at 30 or 20, now guess what your mind does? Your mind's focusing on the 100. And I was making so many mistakes. So now having a trading style fit your overall ideal lifestyle is going to make you more happier. And guess what also, guys? I was focusing on the money. I was focusing on the money to make me happy. There's all these other areas in my life that truly make you more happier than anything else. Successful partnerships, relationships, family, kids, time with kids. So a successful have a trading style fit your overall ideal lifestyle. Now, that also goes into universal law number 4. More is less and less is more. Guys, give me a hell yeah in the chat box if you've overtraded before. You've taken way too many trades and you look back and like, oh my goodness, I just took too many trades. I do that all the time, by the way, guys. I'm like, oh my goodness, stop trading. Right? We've all done it before, right? We've all done that. And the thing is this, guys, we have to think about this in probabilities. And we're going to talk more about this moving forward. But I really want you guys to hone in on only taking those really, 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 really high probability setups for yourself. Now, the reason why I was trading 16 hours a day, because I thought more was more. More was actually less. Now, the less trades I take, the higher the win-loss ratio, the higher the profit. The more trades I make, the lower the win-loss ratio, the more losses, the less profit. Guys, give me an A in the chat box if that makes sense. And that's where I had to stop thinking like more is not more. Less is actually more in the markets. And I really had to start addressing that process in the markets there. So that's universal law number 4 there. Okay, cool. All right, fantastic, guys. Let's actually continue on here. Now, here we go. We're getting into some of the meaty parts here, guys. This is it here, all right? The first 1 to 4 universal laws is more of a foundational. Fundamentals versus technicals. Focus on the technicals. Focus on the charts. Keep the charts simple, etc. Trading style, and less is more stuff like that. That's more foundational stuff. 5, 6, and 7 is where you start to get the growth stuff. Now, here's what I do say, guys. Trading the markets in my time, I've traded sometimes 3 or 4 different trading systems at once. And it was a nightmare because my mind was trying to focus on too many things at once. No wonder I was making so many mistakes. This is what I say to you. Find your simple one edge. Remember, find your simple one edge. That's all you need. We don't need a dozen indicators. We don't need everything like that to try to be right on every single trade. because it just doesn't matter. And I'll talk more about that in a bit later on. But find your simple one edge. Guys, I want everyone to give me a yes in the chat box if you want me to walk you through my 4-step simple formula that just rocks it on any market at any time frame. All right, get ready, guys. Get ready. Take some notes, because the only time that I've shared this is with my private clients. This is the only time I've shared this with you, and I'm about to walk you through step by step my 4-step simple trading formula that rocks it and gets as much as 90% win-loss ratio. I'm not promise you're going to get 90% win-loss ratio, because it's discipline. There's so many things that go into it. But let's actually rock this out. 4-step trading formula. Here we go. Now, rule number 1. We need a collective of small bars. We need a collective of small bars. Remember, guys, we're just after an edge in the markets. We don't need a lot of things. We need one simple edge that's going to rock it out with our socks out. Right? So, rule number 1. And guys, by the way, this is the only system I trade now. This is the only trading system that I trade. I have more investing trading systems, more long-term systems, maybe like the wealth building system you guys have seen, the WBS stuff. You probably guys have seen that webinar. Like, I trade that as well too, but that's more like 12 months, 2 years. If you guys don't know what that is, forget what I just said. This is the only day trading system that I trade. Or should I say trading system. Now, let me walk through this. Rule number 1 is we need a collective of small bars. How many small bars? 4, 5, 6, 7. At least 3 to 4 small bars. That's rule number 1. Rule number 2 is we need to have a breakout bar that's breaking above those small bars, and the bar is strong and it stands out. Guys, give me an A in the chat box if it makes sense so far. Right? Remember, guys, keep this really simple, but simple is best in the markets. Simple is best in the markets. This just rocks out, guys. We need a collective of small bars. Remember, keep it really, really simple. Collective of small bars. Then we need one good strong breakaway bar breaking above those. Now, this is a bullish example, guys. I'll talk about bearish examples, but the bearish example is just flipped upside down. But I'm just going to use a bullish example right now. Now, the bar needs to be strong and it needs to stand out and needs to be above those small little bars. That's rule number 2. Rule number 1, we need a collective of sideways small bars, all right? Sideways small bars or small candles. Then we need, step number 2 is we need to have a breakaway bar that opens and closes in opposite thirds and is breaking above those small bars. Rule number 3 is we need to have a longer term moving average on there. Now, I trade the daily chart, but guys, I've traded this on the Forex market, the futures market. In fact, my mentor who taught me this system, he trades the Forex markets, 1-minute charts, 5-minute charts, stock charts. This is the system he trades. He makes $3 to $5 million every year. Trumps me, but guess what? That's the reason why I'm now becoming a 7-figure trader myself, because I'm getting coaching off him. But rule number 3 is we need a long-term moving average. Now, I use 52 simple moving average. Why 52? I don't know. It was just a moving average that one of my earlier mentors taught me, and it just has stuck with me. So we need the 52 simple moving average. What time frame? It doesn't matter. 5-minute chart, daily chart, use 52. Now, the 52 needs to be pointing up and the price action needs to be close to the 52. Now, why is that? Let me explain here. The 52 pointing up is showing that momentum is strongly up. Therefore, we're trading with momentum. Guys, give me Y in the chat box if that makes sense. If the 52 moving average is pointing up, we're trading with momentum. All right, fantastic. Now, also, if the market is close to that 52 moving average, it hasn't already made a big run yet. So therefore, we could be getting in before the run happens. Guys, give me an A in the chat box if that makes sense, right? Because sometimes you see the market already take off, But if it's close to the moving average, we're getting in at a really good time. Because sometimes when the market has a big run, it goes for rest. But now we're getting in here. Right, so rule number 3 is we need to be close to the moving average, and we need the moving average pointing up. Rule number 4 is we need to look at the volume, and volume is key. Now, on the small bars with the volume, we need to have the volume at, say, a low level. And let's just call this a moving average. We're going to call this a 260 moving average. Why 260? If I'm using a day chart, that's roughly 260 day moving average on a day chart. It gives me roughly that moving average throughout the entire year. So what you want is you want those small bars, those volume on the small bars, you want them to be small, the small volume. Now on the breakout bar, you want the volume to be above that moving average. So you want small bars, small volume. Breakaway bar, volume spike, or an increase in volume. Guys, give me an I in the chat box if this is making sense so far. 4-step trading formula. There we go, guys. There we go. I promised you I was going to share this with you. That's it for me today, guys. You guys have an amazing night, and I'll see you guys next time. I'm only joking, by the way. I'm only joking. No, there's a lot more. No, there's a lot more here, right? A lot more. So, that's the 4-step trading formula. Guys, give me Y in the chat box if you'd like me to show you some examples that's happened in the last couple of weeks. Real life examples in the markets of what it looks like on the charts. All right, fantastic, fantastic. Let's go, guys. Let's go. All right, so chart number 1. Chart number 1. Again, guys, in the last 2 weeks, these have all set up in the last 2 weeks. Now, let's go have a look at chart number 1. What do we have here, guys? Right? What do we have here? Guys, step number 1. Do we have a collective of small bars? Yes or no? Rule number 1. Do we have a collective of small bars? Yes or no? Yes. Cool. Step number 2. Do we have a breakaway bar that's breaking above the resistance and is strong, it stands out? Yes or no? Rule number 2. Breakaway bar strong. Fantastic. Rule number 3. Is the moving average pointing up and is the price close to the moving average? Yes or no? There we go. Rule number 4. On all these small little bars, did we have very low volume here? Yes or no, guys? Give me an A in the chat box, a different number. Give me an A. Give me an A. All right, fantastic. And guys, on this entry bar, give me an I in the chat box if we can see that this volume is above the moving average and it's a massive increase in volume. Fantastic. That's the trade done. I get in on the close, and this is what ended up happening. Again, guys, and this bar here was actually today. The very last bar on this chart is actually today. So the entry bar was here, and look what ended up happening. Now, guys, we're not looking for a massive explosion in the markets. We're just looking for a high probability chance of that stock moving in our favor, because that's what we want, right? A high probability chance. So that's their trade number 1. Guys, give me a T in the chat box if that makes sense so far. Give me a T. Now, John, you're probably thinking, John, it can't be that simple. It really is that simple. The more simple my trading got, the more high win-loss ratio I got, and so on and so forth. Now, let me actually walk you through this here. This works on all markets. My mentor trades the Forex market, the futures market. Throughout this year, I've traded the Forex market just to show my private clients that, hey, this works on the 5-minute charts as well too. But I like to trade options because options give me, remember I said before, I'm looking to scan heaps of opportunities, a few hours a day, and I'm looking to trade options over that stock. So I just do simple strategies. If you don't know what options are, that's okay. But I like to do simple strategies. I like to do simple buy and sell option strategies. Meaning I'm just looking to buy the option and then sell the option. Guys, give me an I in the chat box if that makes sense. right? Nothing complicated. I'm simply just buying and selling, nothing else. I don't need to do anything else. I'm not after complicated. I'm after simple process here. All right. Now, let me show you what's here. Let me show you something here. Now, what I've done here, guys, is what I've brought up here is I've brought up the option for this particular, or one of the options for this particular stock at that time that I was looking at, right? So again, guys, I'm not going to go into details. I'm not going to go into details about what option to pick and all that sort of stuff. I'm not going to get into that detail, but this according to my plan, I actually bought this. This is the option that I saw looking at the time, right? So we have now what you're looking at there with that red box. That's the option pricing, right? This is how much the option pricing was fluctuating. Now you can actually see from the entry bar going down to here that the price here of the entry bar at the close, because I always get it on the close, was worth 37 cents. Guys, give me an A in the chat box if you can clearly see that. I brought up the option price. It was worth 37 cents at that time. All right, fantastic, guys, fantastic. Now, as of today, it's worth $1.37. That's a 270% return. Now, let's use real numbers here. If you used a $1,000 investment on this one simple trade, as a $2,700 profit right now. If you used a $5,000 investment, it's a $13,500 profit. Now, guys, I'm not saying that you would have held on for the entire lot, but guys, give me a B, C in the chat box if you'd even enjoy half of that profit. Just even half of that, right? Not even the whole lot, because half of that was only a couple of days in the markets. Then you're out. So I'm not saying that you would have caught the whole lot. And sometimes I do, guys. Sometimes I'll hold on like this is close to the moving average, and we're getting ready for quite a big move. So I'm actually going to hold on to this. And as long as the stock's making what? Higher lows. Who's in control of this stock right now, guys? Simple analysis. And the stock's buyers. So therefore, if I wanted to stay in this stock right now, I could ride it even more. So that's the one example there. Guys, who'd like me to show you another example? In the last couple of weeks here, all right, there was actually a lot of examples. There's actually about 20 real trades, guys, that came up in the last couple of weeks. Phenomenal trade in the last couple of weeks. Anyway, so that was trade number one. Now again, guys, as I said before, I use these numbers here because once you know what to look for, and then keep it really, really simple. Once you know what to look for and you keep it really, really, really simple, trading can become a much more of a high probability. I'll get into that in a minute, right? Let's look at this here. Trade example number 2. All right, cool. All right, guys. Let's actually go through here, guys. I'm going to go through all the 4 rules. And if you agree with me, you say the number of the rule. Guys, rule number 1, did we have small collective bars? Yes or no? Give me a 1 if we had small bars. All right, cool. Give me a 2 if we had a breakaway bar breaking above the small bars. Fantastic. Give me a 3 if the moving average was pointing up and it was close to the moving average. And give me a 4 if we had small volume and then an increase in volume with the breakout bar. Look what happened. This thing really took off. Now, guys, would you like me to show you the option for this trade? Or maybe I can just skip that part and go to the next example. Let me show you guys. Let me show you what the option is, or what the option was when this happened. This is the option prices down here, as you can see. All right. Now, what do we have here? Real simple. At the break at the break of this trade, this was the option. Now, I'm not going to talk about what option I buy and stuff like that again. I'm just going to talk about the options that I like to buy. I always buy the exact same option, by the way, or every single time. So the option at this time was worth what? 90 cents. Guys, give me an I in the chat box if you can see that. The option at the time of the breakout bar was worth around 90 cents, right? It was just below that $90 mark. As of today, it's worth $4.28. That's a 375% return if you held on this entire time. Now, once again, guys, a $1,000 investment would have turned $3,750. Or a $5,000 trade would have earned $18,750. Now, guys, let me ask you a question. Is this trading system pretty simple? Yes or no? Simple, but it works. I don't have to worry about indicators or anything else. It works. Now, guys, that's a 375% return. Guys, let me ask you a question. Who'd be even happy with a quarter of that profit? If you only caught a quarter of that move and you got out with the profit, who'd be happy with just that? Yeah, that's what it's about, right? Now, yes, you could have held on. Mike, that's easy. That's the easy part. Right? You just got to know, guys, obviously what to look for. And I'm not saying that you look on, but I'm just showing you guys where the entry was and where the trades are today. Guys, give me a H in the chat box if I can show you another example that happened in the last couple of weeks. There were so many examples here. Stop hunting will stuff this up. No, Rob. No, I disagree, Rob. I absolutely disagree. No. I disagree there. You think stop hunting? Actually, I'll get into that. It's not going. It's not. Yeah. So anyway, guys, let's actually continue here. Let me show you the next setup here. All right, guys, let's go through this here. Remember, I want a 1, 2, 3, 4. Right? 1, 2, 3, 4. And what I'll do, guys, I'll get in the questions at the end of this session. All right? 1, 2, 3, 4. Guys, do we have a collection, a collective? Do we have a collective of small bars? Yes or no? 1. Give me a 1. All right, cool. Give me a 2 if we have a breakaway bar that's breaking above the small bars. Fantastic. Give me a 3 if the moving average is pointing up and it's close to the moving average. And give me a 4 if we had low volume followed by a really big spike in volume. And look what ended up happening. Now, let's go have a look again. Let's look at the option price for this one here. What's the option price here? This is the option price down here. Again, guys, every single time I buy the exact same option. The option price here was worth 50 cents. Today, you can see it's actually worth $2.40. It actually ended up getting up to about $3, but today, I'm using today's example, was worth $2.40. That's a 388% increase. A $1,000 investment would have made $3,880, or a $5,000 trade would have made $19,400. Guys, once you start to get really confident with this system, and you can see that 8-9 times out of 10, it's going to run off a good profit. Can you see how when you build your confidence up that you don't need too many of these trades? You don't need too many of these trades to do really well. Give me a Y in the chat box if you see that. Now, obviously, it takes a while to build that confidence and build that certainty and stuff like that. But what I'm trying to show you guys is that you don't need too many really good trades to do really well in the markets, right? So as I said before, now guys, that's 388%. Give me a 1 in the chat box if you'd be happy just with half of that. Yeah, right? That's what it's all about. That's what it's about. Now, let me show you just one more example, guys. One more example, right? Because I've got so much stuff, so many other things to go with you. One more example. Let's do this here together, guys. I mean, again, guys, I wanted to share with you exactly what you need to do to move forward. You want stuff, you want to have this simple here, guys. And remember, guys, that whole stop running only happens, guys, when you don't have a successful trading system, because it doesn't happen with this system. Yes, you're going to get your stop outs, but I'll talk about that. I'll talk about that in just a minute. Now, here we go, guys. Do we have a collection of small bars? Yes or no? 1. Yes. Give me a 2 if we have a nice strong breakaway bar up after those small bars. Yeah, 2. Where's my 2s? I want my 2s. Come on, guys. Give me 2. 2. All right, guys. Fantastic. Give me a 3. Moving average pointing up and the market's close to the moving average. Give me a 3. Fantastic. And 4, low volume plus increase in volume. And the way it goes. Again, guys, let me show you what the options look like. Again, I buy the exact same option every single time. This is why I love to trade this way, guys. I scan the market. I find these opportunities. They don't happen every week. Some weeks there's plenty. Some weeks there's very little. But this is the option pricing here. What is this? The option pricing was worth 15 cents at the time because it was a much lower dollar stock, so the option prices, it was the option price 15 cents. Today it's worth 92 cents. That's a 513% increase. Trading $1,000 would have made $5,130, or a $5,000 trade would have turned $25,650. Now, guys, again, give me an A in the chat box if you just enjoyed a quarter of that profit. You know, you didn't hold on for the entire time, maybe held on for a couple of days and then that's it, done. Exactly. That's what it's about. I'm not saying, you know, this is the potential profit you could have made at the entire time. But I'm not saying that you would have held on the entire time. In fact, if you look at this trade here, this went from 15 cents. The very next day, it was up about 60 cents. What's the percent return on the very next day, guys? If it went 15 cents to 60 cents. This one here really gapped up. Look at that. There, bam. What's the percent return on that? A lot, right? A lot. Guys, let me ask you a question. Would you be happy the very next day getting out and just enjoying that profit? Yes or no? The very next day. One day. Exactly. So that's what I look for myself, guys. If I can get a really good run the very next day, you better believe I'm out of that thing. I don't like holding on to trades that long. But guys, higher low, higher low. All right, so just bear with me for a minute, guys. What I'm trying to teach you guys now is I'm trying to teach you guys a simple system that you can go back test yourself, right? You can go back test yourself and start to implement some of this stuff. Out of my entire trading career, guys, this is the most simplest, most effective trading system on the planet when it comes to trading. All right, fantastic. All right, cool. Now, guys, that was finding your edge. What I did do, guys, is I just gave you my 4-step trading formula that I use for my edge, and I just gave you 4 really good examples that happened in the last 2 weeks. Guys, give me a yes in the chat box if you really enjoyed that part. Right? Because it is as simple as that. It's not that difficult. What is the difficult part? Number 6. That's the difficult part. This is why most traders don't make money in the markets. Hear me out. Trading system number 5 is the easy part. The reason why most people want to make money with this system is how to be more emotionally controlled so you can make better trading decisions. Now, hear me out here. What we need to do, guys, in order for us to move forward in the markets in a much more stronger way, we need to be doing things like we need to be doing things that help us stay more emotionally controlled. Guys, give me a V in the chat box. If you're more emotionally centered, you're going to make better decisions, ultimately making more money at the end of the day. Ray Dalio, the most successful hedge fund investor of all time, said he meditates twice a day, and that was his most successful thing. You can take it or leave it or whatever you want to do there. I meditate twice a day myself. I meditate once in the morning just before I start trading, and I meditate in the afternoon. It just helps me stay calm. Now, that's to stay emotionally controlled. The next thing that's going to help you stay emotionally controlled is trading an amount that the wins are not exciting you and the losses are not hurting you. This is so critical. So critical. Oh, did I spell that wrong? Okay, yeah. It's supposed to say meditate. Right? So anyway, trading an amount that the wins are not exciting you and the losses are not hurting you. And now the reason why that's so important is because the highs and the lows that you get from trading, you don't want that. You want to be able to say, okay, cool, there was a loss, move on to the next trade. Oh, there was a profit, move on to the next trade. If you are trading like that, you're subject to a lot of mistakes in the markets. I'm a trader, host. I'm a trader. I don't need to. Yeah, I can't read and type and stuff like that. I don't really care about that. I know how to trade. Anyway, so the wins, and it's important, guys, to find that balance there, right? The wins are not hurting you, and the wins are not exciting you, and the loss is not hurting you. If you find that balance, every time I had that balance in my trading, guys, and I trade exactly what I just shared with you, guess what? Bam, 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 my account grows really, really quickly. Every time I try to double up and double up and double up, guess what ends up happening? Bam, bam, bam. I end up losing all that profit. I end up going backwards, and now I'm going to start all over again. Guys, give me an A in the chat box if you've done that at least once in your trading career. You had a few winners, then you start doubling up, and then bam, it all went to hell. Oh my goodness. So stick to that process there, and that's different for everyone. That might be 1% of your account for some people. It might be 5% of your account for some people. It's different for everyone. But you need to find that sweet spot. Now, the next thing is the most important thing for you to understand if you want to be successful in the markets. Every single trade you take has a random outcome, right? It has a random outcome. Meaning every time you get into a trade that meets your plan, and it must be the same trade every single time, like I just showed you just then, that meets your plan. Every single trade you take that meets your plan has a random outcome. That means your expectations must be it could make a profit or it could make a loss. But it's built in with the probability of an outcome. And that probability only shows through a basket of trades. Hear me out, guys. This is the biggest thing you're going to learn out of trading. The reason why most people won't even make money from the simple system I just gave you just then is 20 trades. See, if you have your edge, and I just shared with you what my edge was, and you have a basket of trades, right? And let's just say through this basket of trades, 20 trades, you had an 80% win-loss ratio. But each individual trade, you don't know what's going to happen. So your job as a professional trader is, one, to find your edge, two, trade that edge every time, and not think at all, not try to be right. Your process and your approach in the markets, your individual trade, you don't know what that's going to be. Trade number one over here, is that going to be a profit or loss? We don't know. But that's not how successful trading is. Successful trading, as soon as I started getting it, it's like, oh my God, I get it. Because I was always trying to be, if I make money on this setup, then I'm right. If they run my stops, that's the excuse. Then guess what? Then I was wrong. It's like, no. Each individual trade. Thanks, Peter. Each individual trade that you take has a random outcome. Every single trade you take with the system that you know that's going to have a really good high win-loss ratio, every single trade you take, you don't know the outcome. And you must accept the fact, you know what? My job is to take this exact same setup for 20 trades regardless. Trade number one, guess what? It could be a winner. See, guys, here's the thing. When we're trying to be, when we think we had a winner, it's like, oh, look, I got it right. Then guess what? We take the exact same trade the next time and it's a loser. Now we're like, hang on a minute. If I got it right the last time and now it's a loser, oh my goodness, I start to get confused. Like, did I just get it wrong? And now, guess what? Now your next trade here, this is a loser. You're thinking, oh my goodness, what's going on here? The first trade was a winner. Now I've taken two of the same setup. Now we had a loss. I think John sucks. Like this system doesn't work. All this sort of stuff. And like there's a loser. It's like, oh, I'm not sure now. You're trading too much and so on and so forth. And then guess what happens? And the next trade you take, that's another loser. Now you're like, oh my goodness, I thought this had an 80% win-loss ratio. It does over a basket of trades. But no individual trade, you don't know the outcome. Your job is to take it. Then guess what happens? You're like, oh my goodness, I can't believe this. I had 1 win, I've had 3 losses. I've now increased my percentage because I thought I was king, because I thought I had this. And now not only have I wiped my losses away, or my win away, but now I'm down. Oh, I don't know. And then another trader comes. And guess what happens? Guys, do you take the next trade, yes or no? Most people would say no. Most people would say no. But you've got to take the next trade. If it's part of the system, you've got to take the next trade. Because remember, guys, this is the biggest thing that stops people from moving forward. Because guess what ends up happening with this trade? This is a win. And not only is this a win, but this win trumps all of these losses, and now you're back in the green again. And you're like, oh man, I knew I should have taken that trade. Oh my gosh, oh. And guess what? Now you're fearful of missing out. Now you jump on some other thing that wasn't even a trade, and now that's a losing trade. Guys, give me an A in the chat box if this sounds very familiar to people's trading careers. Guys, I got the t-shirt for that 10 times. Right, 10 times. Our job is to find that edge and stick to that edge regardless. He's like, oh my goodness, I can't believe it. And then guess what? Then you see another trade like, oh my goodness, oh, like I missed out on this. I missed out on this win over here. Then I took another trade. Now I'm down even more. I missed out on a really good win. I'm down even more. Oh my goodness. Oh, I don't want to lose any more money, so I'm not going to place this trade. Guess what? That's a win. Oh my goodness, I can't believe this. Oh my God. And now you're just down here from there. Then you take the next trade here, and that's a loss. And then it's so on and so forth. But if you look over this time, you'll find that majority of the trades will work out. But you don't know on any individual trade. You need to think, you got to stop thinking that you know the outcome, or you're trying to do whatever you can with all these indicators to try to make money on any given trade. You don't know that. And as soon as that clicked for me, things became easier. My job is to have confidence in my plan, my edge, and to take the trade every single time. Because I don't know what's going to happen. Every single trade we take has a random outcome. We all know that there's a success rate. But when we trade every trade, we think we're going to make money every time. It's like, no. We have to accept that we don't know what's going to happen. Our job as a trader, our job is to take this setup for at least 20 trades in a row. That's the reason why you need to have the losses are not hurting you and the wins are not exciting you. So you can just keep going through these trades. Guys, give me an I in the chat box if this is making real big sense. The reason why most people don't make money in the markets. This is one of the biggest things that stops people from moving forward, is they don't stick to the plan. You've got to stick to the plan 100%. No going off and trading something else. No, stick to one simple plan and take it. And take it and take it and take it. That's what you have to do. That is the difference for people who are going to make money with, say, that 4-step formula that I just gave, and the people who are not. Now, obviously, there's a process that you need to do, like back testing, researching, doing a little bit of paper trading, starting small, like maybe $100 trades, and then building up. You know, that's actually a process there. But this here, thinking that you know what's going to happen on any given wave, any given one trade, is not going to happen. So we need to stop that, and we need to focus on that. Now, let's move on forward here. Universal law number 7. Universal law number 7. Get ongoing support to help you through the hard times. Even though I knew number 6, even though I had number 5, there were times, guys, that where emotionally I was having a hard time, and therefore it affected my trading. Guys, give me an A in the chat box if you know what I mean there, right? Emotionally, I might have gone through a divorce, or I might have gone through something happened to me, and emotionally I might go through a hard time. And this is where I need support. So this is where my millionaire mentor has made a massive difference in my life. Let me show what I mean here. So a lot of people go on their own. Let's just say this is the starting process here. Okay? So this is the starting process. This is the time. And let's just say we're at the start and we're trying to get to the star. What ends up happening to a lot of people? They start a new system, they get excited, they make a lot of progress, and then they slow down a little bit, and then they make a lot more progress, and then they might slide in, and now they're actually trading live. They might do really well for a while. They might have a bit of a pullback, and then have a little pullback through here, and they're like, oh my goodness, you know, and suddenly they start to go sideways. They're not making as much progress as they were, and a little through there, and now they start to force it. They start to rush it. They're not getting help. Like, they're not getting proper coaching to help them through that. This has been one of the biggest things for me as going to my millionaire mentor, because he helps me get through these plateaus. And then we go, boom. We end up having a catastrophic where we actually trade too much, or we trade a different system and we blame it on someone else. And therefore we go find another system and we repeat the cycle. We repeat that cycle for the next 10 years. Guys, give me an I in the chat box if you know what I mean there, right? I've done that myself. I did that for my first 2 or 3 years. I kept doing the same thing over and over and over and over again, right? And I'm like, what's going on here? And I realized true mastery is sticking at one thing and getting through that plateaus. So this is what I did differently. I made sure I went to, right? I made sure that I went to my mentor for long-term success, not a short-term bubble in that, but long-term success. So what ended up happening was this: I'd make some progress, and I'd make a little more progress, and as soon as I started to notice I went sideways, I went to my mentor and I got some coaching, and he helped me get back on track. Stick to the process. This is the difference for people who become successful in any endeavor and people who don't. So I got some coaching, and now I really started to make a bit more progress. And then I went sideways, and then I started to make some really big gains. I'm like, oh my goodness, now I'm starting to really move forward. But guess what happened even after that? A few weeks later, a month later, something happened, and then I just started going sideways. I'm like, what's going on with my trading? Like, I was doing really well for the first 2 weeks, and now it's gone. I went and got another coaching, and the coach helped me. He adjusted, he looked at my trades, he helped me adjust my mindset, and then boom, I got there, and I got some, and that's what helped me move forward. Was sticking to the same thing. We don't make mastery. We don't become a successful trader by changing system. Stick to the same thing the entire time. Now, guys, whether you use me as a coach or someone else, just get someone that you know you can trust and you can actually go to for support that actually even understands the markets. Right? That's all I say. Now, we have just learned now the universal laws, the 7 universal laws here. 1, focus on technicals. 2, simple charts. Keep your trading simple. 3, have a trading style to fit your overall ideal lifestyle. 4, less is more. And 5, find one simple edge. 6, emotionally control when trading. And 7, get ongoing support to help you through even those hard times. So I hope you've enjoyed today's training, and I hope you can see now through these 7 universal laws just how if you start to apply some of these things that I'm talking about, you can start to make a massive difference in your trading. It's not about being lucky. It's not about having the insider secrets. It's just all about knowing exactly how to truly get ahead in the markets by applying the things that I've talked about today. Now, as I said at the start of this video, the trading system and the numbers here, don't go out there and start the trade right now. Be smart, protect your money. Be smart and go out there and start to test this out for yourself and go from there, okay? Now, what I want you to do right now is that if you've enjoyed today's training, then that's just a snippet of what you're going to learn in the brand new Master Trader Lab. Now, in the Master Trader Lab, you're going to learn the most powerful systems and strategies on the planet to help you become a full-time profitable trader no matter what market you are trading. See, in here is something like 20 hours. So if you've really enjoyed today, it's like 20 hours of what you've learned today, of the foundations, a lot more chart reading techniques, the mindset strategies, a couple of really good trading systems as well too, and so much more. So if you're really going to enjoy that. Now, I'm also giving away a free trial to that. Now, here's what's going to happen. When you get access to the free trial, here's what I'm going to do as well too. I'm going to give you a bonus. When you register, when you get access to the free trial, to the Master Trader Lab, the welcome email you get to give you access to the Master Trader Lab, I'm also going to include in that email a special 90-minute training, and I'm going to go into a lot more detail with the trading system that you learned today. Did you like that trading system today? Would you like to learn more details about that, of exactly how to look for, and maybe more examples as well too? Maybe examples on the forex market or the stock market or any of the any markets out there. Would you like that? Well, I'm going to be giving you a special 90-minute training. It's going to go into a lot more detail with that as well too. So this is what I want you to do right now. I want you to go down to mastertraderlab.com, and in the and when you actually register, when you sign up for your free trial today, not only going to get access to the entire lab to test it all out for free today, but with your welcome email, I'm also going to include a special link to a special 90-minute training that's going to go into absolute detail, more detail about the trading system as well too. And that's a free training for you as well too, okay? So go to mastertraderlab.com to grab your free trial, start getting access to all of this as well too. Now, I did promise you at the start that Tony Robbins and Arnold Schwarzenegger both said something to me which completely turned it around for me. The first thing they told me was, John, you need to learn as much as you can about what you're doing. So for me, it's trading, right? So when I first started was that you need to learn exactly what you need to do in order for you to become successful. Start going to people, right? Start going to people who are doing really well. And so for me, I was very fortunate to go to seven-figure traders. When I was $250,000 in debt, over the last 15 years, I've gone to 2 different seven-figure traders, and they took me from $250,000 in debt to now a very, very successful trader. And by applying what I learned, and that's what I'm passing on to you here in training. And that's a snippet of it. You're going to learn so much more in the actual training as well too, in the actual in the free trial to the Master Trader Lab, and also the special 90-minute training one too. I'm going to be sharing with you everything that's really going to help you take everything to the next level there. So the number one thing they said is that go find someone who's doing it, and just start to model, start to copy them. So that's what I want you to log into the Master Trader Lab. I want you to see the 90-minute training, and I want you to start to copy what I'm doing right now. Don't try and change it. Don't make it hard for yourself. You can really, really, really do this, okay? So anyway, so to grab the free trial and the special 90-minute training, just go to mastertraderlab.com, or there might be a link or something around this page here. Go to that right now. Go get your free trial, and I look forward to seeing you in the membership area for the Master Trader Lab. So go to mastertraderlab.com right now, and I'll see you on the next page.